Here we go, just a couple of minutes before 3 o'clock. Welcome back to Central Valley Talk Live, our Tuesday edition. It's March the 15th. Welcome. I'm Austin Reed, coming to you from our Tower District studios inside the Mike Briggs building. Connect with me on Facebook, Instagram, TikTok, and Twitter at Austin Reed on air. Hey, our next guest joining us live in our studio. Give it up for Kristin. Kristin Lucas. Right? Did I get your last name right? Okay, yeah. Very good. And you are with, the company is...
Summit Funding.
Summit Funding. Mm-hmm. This is your first time on the show, so welcome.
Thank you.
Yeah. Let's start from the very beginning as far as your career in lending, funding.
Sure. So I actually got started in 2005. Right out of Fresno State, graduate and finance degree, and then got involved in the mortgage business. Took a brief break, I would say, for a couple years, and then in 2012 started in again. So it's been about 10 years total, consistent.
So then you experienced the 2008, 2009 crash, and now you've experienced the pandemic.
Yeah.
Both very different.
Very different. Extremely different. The pandemic, ironically, I mean, rates dropped to all-time lows. Mm-hmm. The refinance boom went crazy. So on the flip side of it, there was so many foreclosures and everything else that happened on the original 2005, or I should say 2008 crash. So both very different.
Here's the big question. As the pandemic, we hope, is behind us.
Yeah.
Are things starting to change?
They are. So, I mean, the big thing we're seeing right now is rates have gone up pretty significantly over the course. I mean, that's all tied to inflation and different types of things like that. But they've gone up probably a good point, almost 1.5 to 2 points over the course of the last 6 weeks.
I saw one number just driving down Blackstone. I don't even know the company, but it was like 3.98%. Is that low right now?
That's still low.
Okay,
I mean,
so
and
who knows if
yeah, I mean, loan
that.
programs depend on it, right? So FHA, VA versus conventional financing, credit score. There's so many determining factors into the interest rate piece of it. So that's why it's hard when you see rates just being quoted, because it's hard to know the specific program, I guess, tied to it, and if there's certain requirements to get that particular rate, or buying down points, or different things like that. So, but yeah, I mean, I would say we're more realistic in the mid-4s. The Feds have a meeting tomorrow, and I think that's going to cause some rate volatility as well. So it should be interesting.
Are you seeing the war in Ukraine as a reason for some recent changes, or are we going to see some more changes due to that?
Possibly. I personally think, like, as the Feds continue to hike rates, which, believe it or not, they're not hiking mortgage rates. They're hiking short-term rates like auto loans, bank loans, credit cards, things like that. So I think we're going to be tied a little bit more to the inflationary piece of it, and I think they're trying to really pull back and slow things down in the economy a little bit by doing it. As far as the war piece goes, I mean, that's definitely probably going to create more volatility as well.
Okay. If you know, what are some of the tools and tricks that you have experienced in working with your clients the last couple of months, or even in the last, say, 12 months?
I think one of the big key factors is making sure they're fully pre-approved as far as underwriting up front. So they've gone through the fully underwritten process. That way, if there's any questions, concerns, or whatever, we can address them ahead of time. That way, it makes for a much smoother escrow process. I think being communicative with both buying and selling side is really important, just because they know that we're meeting all the deadlines as well. Then also kind of talking different people through, there's what we call appraisal guarantee, appraisal gap clauses, trying to win offers. So trying to stay competitive in that part of it as well.
As we go through the rest of this year, any other trends, any other advice for our viewers today?
I mean, it's there. The demand versus the supply is still, there's a huge gap between the two. So I think there's going to be still a long time before we see any type of housing prices drop, just because the demand is there, and there's just such a lack of inventory.
Right.
I think that even though rates are still going up a little bit, they're still historically low, considering, I don't know, at one point I think people were at 16%, somewhere around there for an mortgage interest rate. So historically speaking, they're still low. I think for so long people were used to seeing rates in the high 2s, low 3s, and so it's a little bit of a shock right now. But at the end of the day, people still need to buy houses, and so I think that it shouldn't have a huge impact long term.
Okay, people can connect with you. What's the best way?
Phone at business phone is 559-972-8635, and then I also do have like an Instagram page or email as well. I can provide that information too.
Very good. All right. Well, come back anytime.
Okay.
Thank you.
Thank you for having me.
Great conversation and very good insight.
Thank you.
We appreciate it.
Thank you for having me.
And you serve all the Central Valley, right?
All of Central Valley,
Okay.
yes, or actually anywhere in California.
Oh, anywhere. Okay, very good. So for people maybe moving out, I
Exactly.
can still work with you.
Absolutely.
Love it. Okay. Kristin, good to meet you.
Thank you very
again.
much to meet you too.
I'm Austin Reed. Thanks for joining us for our Tuesday edition of Central Valley Talk Live. Have a great rest of your day. We will be back tomorrow for our Wednesday edition starting at 11 a.m. live and local. We'll see you soon at centralvalleytalk.com.